Let's cross over to our studios in Nairobi now, where Samora Kariuki, research analyst from NIC Securities, is standing by to take us through the performance of that bourse last week. It was closed yesterday for public holiday and, of course, throw through to the rest of the week. Samora, thanks for joining us this morning, as always. Let's just run through performance last week. NSE 20 rising some 0.4%, settling at 3,115 points or thereabouts, showing signs of resilience towards the end of the week. Really, the last 2 days accounting for the majority of the turnaround that we had. Is this just bargain hunting as we come into the end of the year?
I think it could be bargain hunting by some investors and investors who are not cash constrained, because usually going to these periods of December and January, a lot of retail investors are constrained for cash, and therefore they end up liquidating a number of positions to fund things like school fees and other such expenses. So therefore, some of the gains we've seen in the last week are from investors who are not constrained for any cash, coming in and seeing bargains on some counters, the banking counters and other such counters. So I think it's bargain hunting by some investors.
Still month to date, that the market down some 8%. It hasn't been a good year, 2011 for the stocks. Let's just look at the two largest firms, EBIL, conflicting trade between the two stocks. EBIL rising some 5% for the week, whilst we had Safaricom out of favor once again, losing 3.5%. Foreigners continue to offload this share. What are you reading into the play between these two largest stocks?
You must understand that East African Breweries started off from, has been losing since the beginning of the year, whereas Safaricom has been more recent. And therefore, I mean, at the beginning of the year, EABL was trading for around 220 shillings, and now it's around 160. So it has really lost over the year. So right now, investors are still seeing value in East African Breweries, whereas Safaricom, especially given their first half results, and going forward into, I mean, what has happened with the shilling and other in the interest rates that are having an effect on the expenses, we are seeing investors still selling off. But we could see resilience at the 275 mark, and even in 2009 we saw resilience at this level of 275, and maybe it could be reaching a bottom. But the thing is that East African Breweries has been losing for a very long time, since the beginning of the year actually, and maybe now investors are beginning to troop back into the counter.
Is it a case of you buy one or the other, or both to have in your portfolio?
I think there's no correlation between East African Breweries and Safaricom. And I mean, whether you put them in your portfolio will depend on your outlook for both counters and your investment requirements. And I don't think it's like they're mutually exclusive. Let's just put it at that.
Let's move on to TransCentury, one of the stocks that was rallying last week, up over 11% on the week. That purchase of Civicon Limited, transport and construction company, went through. What type of synergies do you see between these two companies?
I think it's a perfect fit for TransCentury and the specialist engineering division. So far, the key cash gainer for Safaricom in the specialist engineering has been Ivory. But now, with the addition of Civicon, we expect to see a lot of revenue growth from their specialized engineering department. And I think it works well into the plan of becoming an infrastructure conglomerate, because Civicon has been heavily involved in infrastructure projects in East Africa, the construction of storage terminals, roads, dams, bridges, and I think it works really well for the company, and we expect to see revenue growth from the acquisition of Civicon. The only thing, though, is that the pricing, we haven't yet gotten firm information about the pricing, and that could affect whether they're overpaying for it or not, could affect the counter going forward.
But going forward, a good proxy for the infrastructure spend that we're seeing in the East African region. The stock has been severely depressed, down some 50% at 30 shillings. A good entry-level point?
I think it's a good entry-level point. If you think that between Ketraco, KPLC, and other East African infrastructure, power transmission companies, we expect to see a capex of around 155 billion shillings in transmission infrastructure and electricity alone over the next 4 or 5 years. And if TransCentury gets only a 10% market share of this, then those are revenues of 15 billion, and that's already 2.5 times higher than their 2010 revenues. So there's significant room for revenue growth for TransCentury, and I think it's a good entry point at the moment.
And let's move on to the agricultural sector. We've had some results out of Sasini Tea, 60% drop there in net profits, a devaluation in its coffee and tea bushes as a result of the drought that we had at the beginning of the year, really hitting earnings there, and that wiping out the gains that we've seen from a weaker shilling and record high tea and coffee prices. Were you expecting such a large drop in earnings?
I mean, the devaluation is more so an accounting issue, and therefore from a cash perspective, if you could call it that, they've done relatively well from the exchange rate and from the tea prices. And going forward, we could see with the rains now that the devaluation could end up working favorably for them over the next few years. So I think with these agricultural stocks, you should pay much attention to the revaluation of biological assets per se, and you should pay more attention to the cash generating ability of the company. And from so far, the performance with regards to the exchange rate and the tea prices hasn't been that bad.
And the company was cash flush during the period, generating additional cash of some 659 million shillings. They've also paid a dividend of 1 shilling. That's double their previous dividend. That's likely to excite investors.
Exactly. I mean, it's very likely to excite investors, and dividend counters right now are not hard to come, are not easy to come by because of the performance of the economy. So whenever a counter announces dividends, I think there could be a lot of interest, and especially the agricultural sector at the moment. We saw Williamson Tea selling a building, and that generated some cash for them, and we've already seen Sasini paying a dividend higher than the last year's. So I think the agricultural sector right now could be a good place to shop for dividends.
Are you focusing in on dividends as we see stocks still depressed? We don't know when this bear run is going to end. Are you paying a lot of attention to the type of dividends that we see?
Exactly, because right now, I mean, the prospects for capital gains are not entirely convincing, given the global investor risk aversion that has affected not only the Eurozone or the United States, but also Africa. And I think you need to look for something that will limit the downside, and that will give you something in return for investment rather than capital gains, which could be hard to come by over the next year or so.
Then on that basis, if we are going to be looking for strong dividend yields, which stocks are your top picks on the equity front?
I think Carbasid for one could pay a good dividend going forward. From the banking sector, you have to look at counters like KCB and Equity, which still have adequate capital buffers that they could end up paying dividends, because some of the banks might have to reinvest their money so as to boost core capital. So I think counters like Carbasid, Sasini, and maybe KCB or Equity because of their strong capital buffers.